Happy Sunday, everyone. Today in this video, we're going to go over the stocks I'm looking at potentially holding in my $10,000 portfolio. We're going to go over the thesis behind those stocks and also look at the stock charts, look at the price action, see if we see any indicators of what could happen in the future. But yeah, check this out though. Bam, bam. I learned something with OBS, so now I can toggle between that when I want to. But all right, let's jump into this. So the basics for my $10,000 challenge portfolio is the rules are no ETFs and I can only hold a maximum of 10 stocks at a time. The goal is to beat the S&P 500 performance in 2026. The S&P 500 averages a 10% return. I would like to at least double that. I have doubled the return this year, so I think that's a good goal, but the main goal is simply to beat the S&P 500. If you're putting time into researching stocks, holding individual stocks, taking on that risk, you should at least try to beat the S&P 500. Otherwise, you're better off just holding VOO and calling it a day. So how I'm going to accomplish this is by purchasing profitable stocks with good growth. I want to limit risk on speculative hype stocks and stocks that are unprofitable. And obviously, the longer-term goal is not to lose money on these stocks. There is a chance that after my initial buys, they could go down a little bit because I'm not trying to time the bottom. It's very hard to time the bottom of a stock. I am trying to make purchases when the stocks are at good prices where I think they can go up, but it is possible they will go down in the short term. But by the end of 2026, my goal is to be up and again, hopefully double the rate of return of the S&P 500. I do want to say when I started my investing journey in 2021 or 2022, whatever it was, I did buy some speculative hype type stocks, which I did lose some money on. Not a ton of money, but I bought quite a bit of the ARK ETF, the ARKK ETF. I think I put about equal amount of money in VOO and ARK, and at first it looked like a good idea, but then the ARK ETF crashed because a lot of the companies held in that were more hype speculative stocks. But I felt like ARK was good to introduce me to certain stocks, which I researched on my own. And then I held those by myself without buying the whole ARK ETF. But yeah, speculative hype stocks that are companies that aren't profitable aren't the best purchases. They're very risky. Now, can it pay off and you gain a lot of money? Sure. But I don't want to really take that risk. So with my position sizes, I'm going to do either a $500 position, a $1,000 position, or a $1,500 position. The amount I put into the company will basically be determined by how strong of a company I think it is. Even with the company with Chipotle, I feel like Chipotle has more risk than Texas Roadhouse. So I would put less money in Chipotle than I would Texas Roadhouse. So just things like that. All right, let's get into the holdings. As I talked about last time, my current holdings are AMD, Chipotle, HIMS, and Texas Roadhouse. I do consider these more risky picks than my potential stocks I already own, which I might add in this portfolio as well. NVDA, Microsoft, Google, Amazon, Shopify. Of these five, Shopify being the most risky, my current four holdings are kind of risky. Chipotle and Texas Roadhouse are currently going down. They face decreased consumer spending, increased expenses on food, so you never know. AMD faces stiff competition from NVIDIA. NVIDIA just partnered with Intel to kind of take away from some of what AMD is doing. So yeah, there's always risk involved. So you have to make calculated purchases, make sure you're not just buying a company based on hype. The company actually has sound fundamentals. It's growing, it's profitable, things like that. But I did have some other notes. Let's go over. So I talked about AMD, Chipotle, and HIMS and Texas Roadhouse last episode, so I'm just going to briefly talk about why I'm holding them. So AMD, while they do compete against NVIDIA, they do create a little bit of different chips, and I don't think it's going to be a one company takes all. I think there is definitely room for both NVIDIA and AMD to do well. NVIDIA is at all-time highs. AMD is not. I feel like AMD does have a good growth potential over the long term. Like I said in the last episode, if I was only going to choose one stock, I would choose NVIDIA over AMD. but I do think AMD is a good purchase. Chipotle, I love the food. I feel like they're going through a downturn right now based on the quality of the food, the quantity of the food, and customers not liking that. They're probably also experiencing increased cost on their foods, but they are expanding. They're expanding internationally. They're adding more stores. I think they're going to come back. I don't think they're going to go bankrupt or anything like that. HIMS is an online healthcare provider that provides both prescription and non-prescription over-the-counter ingredients. HIMS recently launched the men's TRT category. They have an oral anti-estrogen to increase testosterone, and in 2026, they're adding injectable and an oral testosterone. They acquired a UK-based company, I think it's called Zava, so they're going to expand into Germany, France, and Ireland. They're building a new facility, I think it's in Ohio, so I feel like they do have a good growth trajectory as well. They do face uncertainty, though, with the FDA. I think FDA's coming after them for some wording or some claims. The partnership with the GLP-1 provider Novo Nordisk ended, so they definitely face some potential issues. I think right now there is a good risk to reward. That being said, it's quite possible the stock does go down in the short term, but long term, I feel like this company has potential. Texas Roadhouse, great steakhouse. They're growing. They're doing well. The stock price is going down currently. I think they're going to come back. Do I think I only bought one share, but do I think I timed the absolute bottom? No. I do think Texas Roadhouse could go down from here, but if it does, I will buy more. All right. Anyways, let's get on to potential stocks. So here are 10 stocks I'm looking at. I might add another one at the end, actually. So stocks I currently own that I might hold in this portfolio as well. NVIDIA, Microsoft, Google, Amazon, Shopify. All very strong companies. NVIDIA is the leader in semiconductors, the AI microchips, data center infrastructure. They're powering the AI revolution. I want to look at the charts today, actually. So I'm going to go over each company, kind of talk about the thesis behind them, what they do, and we are going to look at the charts. All right, so as we can see here, big run up, tariff lows from this past year, great time to buy, and now where they're currently at. All right, so this is the current support from the previous high. We can see that once it broke above it, it back tested it, and now it's going up again. Currently, it found more support around this area. Bam, could be the ABC correction. Could it go up further? Absolutely. I do want to say before I continue with these charts, the market is getting a little euphoric in my opinion. Everyone's getting a little cocky about their gains, and basically, if you buy anything, it's going to go up right now. So, all right, so taking the retracement of this high to low, we see it's getting up there. I mean, the potential targets are the 1.618 and the 1.75. Even if NVIDIA does go down, even if it goes back down to here, long term it's going to grow. So I think NVIDIA is a very safe stock to buy. It is my largest individual stock holding, and with that said, I would not be scared to hold more. So NVIDIA is currently right around the 50-day moving average. Is it under it, actually? I can't tell if it's under it. So on Friday, it found support on the 50-day moving average, which is a bullish signal. So NVIDIA is looking pretty good right now. All right, the next stock, Microsoft. I mean, Microsoft is a software cloud giant. They have Windows, Microsoft Office, Azure. Is it called Azure? I always want to say it different because it has a Z. Azure, Microsoft Teams are expanding into AI. They have the partnership with OpenAI. They have Xbox. I mean, they are a juggernaut of a company, super strong company. Their cloud is doing well with Azure. Super strong company. Let's look at the chart. All right, so Microsoft had its ABC correction, tariff lows from this high to this low. Let's see where we're at. Oh, and before I go over this, I'll just say kind of how I do technical analysis. Things I look at: support and resistance, where prices found support, previous highs, previous lows, they found support, previous where the price bounces. We see here there was a lot of support and resistance there, hit resistance, blah, blah, blah. I do a little bit of the retracements from peak highs to peak lows, lows to highs, and I do a little bit Elliott wave. Obviously looking at RSIs involved as well, but I try to keep it super simple. I don't use any of the clouds, the Gann squares. There's so many different tools you can use, but I try to keep it pretty simple and straightforward. When we take the retracement from the high to the low, we see that Microsoft hit exactly at the 1.75 and then it went back down. So, I mean, I feel like this is a good spot if Microsoft continues to go up. It basically hit the algorithm target, went back down, dipped below the 50-day moving average, and now it is back above it. But it did find resistance at the 1.414. Yeah, so that means either way that could be the bottom or that could be the A, go up for the B, come down for the C. We will see. But as of right now, the price action on Microsoft looks bullish. Nothing crazy. It's in a strong uptrend. It retraced a little bit, and it's potentially going to go back up. Next on the list, we have Google. Google is obviously another super strong company. You're watching this on YouTube. YouTube is owned by Google. They have Google Search. They have Google Cloud. They have Waymo, the self-driving car. They have their Gemini AI. I use Microsoft, not Microsoft, excuse me. I'm wrong. Thinking of something else. But yeah, I mean, Google is a super strong company. I think they have a lot of positive things going for them. Let's look at Google. Same thing. Google is currently approaching and starting to find a little resistance at that 1.75 mark when you take the retracement from the high to the low. And again, a lot of this is just, a lot of trading is done by algorithms. So they're buying and selling at certain marks on the chart. We look at this though, the previous high found resistance, now it's finding support, now it's going up. Another one of those companies, same as Microsoft, I do think it is going to go up higher over time, over the years for sure. Could it retrace a little bit? Absolutely. I wouldn't be surprised if it followed the same exact pattern that Microsoft did. It came back down to the 1.272, went back up, and there is a gap here. If you remember last time we talked about the gaps, typically gaps do get filled. And Google is quite a bit above the 50-day moving average, so extremely bullish right now, but probably has some room to come back down and retrace. Look at the RSI. The RSI is at like 88, so it's definitely very overbought right now. I would expect a retracement. So if I do purchase Google in this account, I will wait for the price to come down a little bit. But I would not be afraid to hold Google for any period of time. Next up, Amazon. We all know Amazon. Amazon they have their e-commerce and logistics. You order something on Amazon, it could get delivered that same day. They have the Amazon Web Service, which is a leader in cloud computing. They're expanding into AI. I believe they're working on their own microchips to use. So Amazon, another juggernaut company, and another company I would not be afraid to hold forever. So Amazon is quite a bit different than Microsoft and Google because we see it has not passed its all-time highs yet. It is working its way up. pretty much all stocks, especially the tech stocks, you're going to see that bottom in the March, April tariffs. From there, all the stocks are going up. Some stocks are going up faster than others. Amazon has yet to pass its all-time highs. It's finding support on the 50-day moving average. You can see it's bouncing up off that 50-day moving average. I would be confident buying Amazon. I think I bought a share last week in my other portfolio. So I think Amazon is a good buy right now. And Shopify. I use Shopify for my e-commerce store. It makes building a website and store so easy. They're expanding in the logistics and payment processing. I know they're doing a lot of AI stuff with their store. I feel like I see them putting in a lot of effort to grow and make their offering better. It's a subscription-based model. I think I do yearly because it's cheaper than monthly, but they do offer the monthly package. If you're starting an e-commerce store, 99% of the time, I feel like you're going to go on Shopify. There is Wix, which I've used in the past for other stuff, and I don't think it's as good. I have never had an issue with Shopify. I think it's a great platform. I'm purchasing it because I use it. I use the product. I'm confident in the product's capabilities. Where's my other chart at? Okay, there we go. So let's look at the chart. So Shopify, as we just talked about, and as you'll see, all the companies did very similar things. They dropped down for the tariff low. They approach the all-time high. They hit the resistance. They retrace a little bit, and then they break through. Look how there's so many companies that hit resistance at this all-time high, retraced, and then they gapped up because they all did earnings, and everyone's earnings came back really good. I think that's what surprised a lot of people in this past quarter is with all the tariff news and everything going on, I think a lot of people expected weak earnings, but Google had amazing earnings, Microsoft did, Shopify had really good earnings. Like a lot of companies had really good earnings, and that's why you're seeing a lot of gaps on the charts. From this, they have not retested this previous peak. They just broke right through it. So I'm hoping and thinking they are going to retest this previous peak. And that's when I would add to my holdings. I would love it if it went lower, but I don't know if it will right now. But I do think this is a great buy point. Oh, I forgot to say at the beginning of this video, I'm going to have to put up a disclaimer. None of what I say is financial advice. I'm not a professional. I don't know what I'm doing. I'm just drawing some lines on the chart and buying some stocks when I think it's a good time. Don't listen to what I'm doing. Do your own research. Pick your own stocks. Again, not professional advice, not financial advice. I'm not professional. But I think, actually, I want to let's look at Shopify on Qualtrim. Again, if you're not following Joseph Carlson, I highly recommend you do so. He gives great insight and advice in investing in stocks. But let's look at Shopify. So we see Shopify's, the merchant solutions, okay. So the revenue is increasing in both the subscription solutions and the merchant solutions. Revenue is increasing. Free cash flow is increasing. Oh, that was, okay. And if you just look at total revenue, it's increasing very well. Shares outstanding looks stable. So, I mean, I feel like the company is in a good spot. Free cash flow isn't super high. The PE is currently 84. PE is tricky right now because Palantir's PE is like 500, but the stock keeps going up. Yeah, it's 554. So the PE is very high in some of these tech companies, but their price keeps going up. So I don't want to use a high PE as the sole reason why I don't invest in a company. But Shopify is looking really good. I'm hoping it retraces, and I will probably add to it. And those are the companies that I currently hold in my other portfolio that I might hold in this $1,000 or $10,000 challenge portfolio. I feel like all of these are great buys. So now let's get into the stocks I'm interested in because they have good stories behind them. It looks like they're doing well financially, and they are interesting buys. So Celsius, I don't have it here. So I own a sports supplement company. I produce pre-workouts and protein powders. I've been in the industry for over 20 years, so I'm very familiar with the market. Celsius is an energy drink, a caffeine-based energy drink. I did just buy some at Costco because I wanted to try the product because I am considering investing in the company. I think the product's okay. The formula itself is nothing special. It's basically flavored caffeine. I felt like the flavors were okay, so I wasn't blown away with the product itself. But again, after being in the industry for 20 years, I know the product itself isn't the most important thing with selling that product. Marketing, the influencers you have behind you, marketing is more important. That's the most important thing. If you can market a product and your product's decent, you can make it sell. But the reason why I'm interested in Celsius, let me pull up the chart. I was actually watching Celsius last year, and again, I didn't really see the reason to invest in it. Yes, it's a fast-growing company, but it just has the caffeinated beverage. I didn't really see or understand why its chart looked like this, how it grew so much. But if you look at Monster Energy is a monster. I mean, this chart, it grew so much over the years. So I think a lot of people also felt like, Monster Energy is a good example of what can happen in the energy drink category. So a lot of people are buying Celsius. Let's do this first. So if we take the retracement of, I'm going to take this off. We look at try to find the bottom, go all the way to the peak. We see, where did it stop? Right at that 786. Again, a lot of trading is controlled by computer algorithms, buying and selling at certain points. So it's going to hit these markers. That's why as an individual investor, it's always best to buy the stocks you believe in and hold them. The big investors want to shake you out. They know what they're doing. Again, they have algorithms, they have computers, they have everything being controlled. You're not going to outsmart them. So I basically use this technical analysis as a way to help make sure I don't do anything, I don't want to say stupid, but just more informed decisions on when I'm buying. Okay, but, oops. So it's like right at the 786, which is a very deep retracement. This was a great time to buy. It was around, $22. Now it's up to $62 within the past, that's like 8 months, 8 to 10 months. So it's tripled in value in 6 to 8 months. That's one reason why I'm hesitant on buying it, because it did shoot up so much. And again, if you're in a technical analysis, fine. If not, it is what it is. But this looks like a great cup and handle forming, doesn't it? A cup and handle pattern. We see this was a previous peak in resistance, went all the way down. This is where all the big buyers accumulated. Now it's back up to that 0.382, and it's starting to go back down. If it's doing its ABC correction, like I said in the previous video, it's typically the C leg is the same as the A leg. There was a small gap right here. Like a lot of things on the technical analysis side are lining up for a retracement, at least to this point. I think it's going to hit that, and I might consider purchasing then. We can see it's above the 50-day moving average right now. If it does retrace here, it's lining up with the 100-day moving average, I might add a position. I honestly haven't decided yet. Let's look at the financials. Oops. I can't type it. All right, Celsius. And so I guess the other reason I'll go over before we look at the financials is why I'm considering purchasing Celsius. Because if I just look at Celsius as an energy drink, caffeine drink by itself, there's not really a great story behind it. But PepsiCo increased its stake in Celsius to 11%. And in that deal, Celsius acquired Rockstar Energy, which is another energy drink company. Celsius acquired Alani Nu, which is another supplement company with a popular energy drink. And because PepsiCo now has a stake in Celsius, Alani Nu is also going in distribution through Pepsi's distribution channel. And so Pepsi's now going to distribute both Celsius, Alani Nu, and Rockstar in the US and Canada. So there is a good growth story behind the company. There is expansion. New brands are being added. If Celsius, Alani Nu, Rockstar go into Pepsi's distribution, sales are going to go up no matter what. But let's look at the revenue. So as you can see, revenue was going up very fast and then it dipped down. That's why you saw the stock price go down so much. The company was growing so well, and then it started to show weakness. Bam, stock price is down. But then this previous quarter, the revenue is the highest ever, so they are making a comeback. Stock prices are falling. Stock prices are going back up. Free cash flow is positive. Not super stable. Cash and debt. So that's concerning to me. Oh, I guess maybe that's from the purchase though. Purchasing Alani Nu is probably why they have more debt or they spent more here. But yeah, I mean, cash is actually up until that point. But yeah, I'm on the fence with this one. I think the product's okay. I think there's a good story behind it. I'm not sure if I want to invest in this company or not. The energy drink category, I think is it's kind of a risky market, so we shall see. But I did purchase the product and try it myself. So next we have e.l.f. Beauty. I have actually used some of their lotion before. A previous girlfriend of mine used them, so I had used their products before. Outside of her, I would have no idea what this company is. But there's been a lot of talk about e.l.f. Beauty. It's a cosmetic and skincare company. It's super strong presence on TikTok. That's what's also drawing me to this company is I feel like they know how to market to their consumer base. And again, they're very strong on TikTok. They just purchased Rhode, which is Hailey Bieber, Justin Bieber's wife's makeup line for like $1 billion. So they do have another brand. The company is growing very well. They're very popular in the younger consumer base, and they basically make quality products at a cheap price. What would make me not purchase this company? I know nothing about makeup. I know nothing about the industry. I feel like that's an industry where a company can be super popular, then fall out very quickly. So I don't know how loyal the customers are, but let's look at the financials of that company. Okay, so when you look at the revenue, I mean, the revenue is growing very quick. Free cash flow, trending up, it is up and down. This one I don't really like, but looks like they have a lot of debt. Where's it up here? Yeah, so they do have more debt than cash. Kind of concerning. Expenses are obviously really high. But yeah, I don't think I'm going to invest in this company. I would only be investing in it because of the story, and I feel like the chart looks good. If you look at the chart, it looks exactly the same as Celsius. Let me delete some of this stuff. Super big run up. Look at this. Look at the retracement going back up almost to all-time highs again, back down. Look at Celsius. Celsius did the same exact thing, all the way up, down, right back up to all-time highs again, then all the way back down. e.l.f. is following the same exact pattern as Celsius. All right, so let's do this retracement just to see. And again, I just use this technical analysis to determine good buying points. That's not going to determine if I buy the company or not. I don't purchase stocks just based off of technical analysis. I think that's better for swing traders or day traders. Again, I'm just looking for good entry points. But again, look, this retraced right at the 786, the same as Celsius. Has a nice cup and handle, and now it's going back up. Bam, ABC, going back up. They were down almost 5% on, look at, what did I say? Look, the peak reaches the peak, finds resistance, goes back down. Celsius, previous peak, cup and handle, hits that same peak, goes down. It's all patterns. It's all patterns. But the most important thing is finding the right companies to buy in. And again, I'm not strictly using technical analysis to decide what I buy, but I'm using it to find where I might start purchasing. So again, if I bought ELF, it'd be strictly because I feel like the chart looks good. Like I could see it getting back to all-time highs. I will still do some research on this company. I don't know if I'm going to purchase it or not, but it does look like there is potential. Next up, Robinhood. Robinhood is a trading platform, I guess you could call it. They're basically a brokerage. You can buy stocks, ETFs, crypto. I believe they have banking. They have a credit card. Super popular, super good app. I have downloaded the app and I've used it before. I'm not currently using Robinhood for my holdings. I would be open to using it in the future. I just didn't want to move everything off of the brokerage I use to Robinhood. But Robinhood exploded. The chart absolutely exploded. And this was one of the stocks I'd watched for a long time too, but I didn't see the growth potential. I honestly didn't think it'd grow this much. But if you look back here, when they launched they probably did an IPO. So if they did an IPO, went from 33 to almost 90, so almost tripled, then went all the way down to $6 to $7. With IPOs, when companies launch their IPOs, it's normally not a good idea to buy in the beginning. I feel like every single IPO I've seen typically goes lower than the price they launched at. Shoots up, goes down lower, then it can go back up. But I did not think Robinhood would grow this much. It's currently at $124. So if you bought down in this area, anywhere from $25 to $6, you made a great purchase. So we will see what this stock does. Robinhood has a very strong retail backing. Everyone on Twitter loves Robinhood. A lot of people use Robinhood. Robinhood was doing things like if you transferred your Roth or your brokerage into them, they gave you money on top of that, like really good offerings. They're expanding into different areas. They're doing the tokenized sales of stocks. They have crypto. They got lots of things going for them. They got banking. Again, they got the credit card. I don't know if it was them or someone else is doing they're adding a social media aspect to it. So I feel like Robinhood is a great trading platform for the younger generation. There's a lot of features that are going to draw them in. So I think it is going to grow. I don't want to buy right now because it is at all-time highs. Is it likely to follow the other stocks we've seen up to the 1.618 or the 1.75? Probably. But yeah, I'm just not super confident in buying at all-time highs for this company. Let's look at the financials. I mean, yeah, so they're growing. They're still a younger company, so we don't have the long chart, but I mean, they are growing at a good rate. I mean, in the past year, they're up 60% almost. Past 5 years, they're up 47%. They are growing very well. Free cash flow up and down. They're spending money. Free cash flow percent to PE 61. They have no debt. 13 billion in cash and no debt. That's actually pretty strong. So that is promising. But yeah, another stock I'm watching. I'm not sure on this one yet. Now we get into two stocks that I really don't know much about these businesses outside of what I've researched recently. We have NBIS and CRWV, which they're basically like cloud computing for AI. NBIS, the only reason why I even know about them is they just signed like a $17 billion deal with Microsoft for their AI infrastructure. And we can pull up the chart real quick. When they did that, the stock price shot up, obviously. But I never heard anyone talk about this company until recently. So this stock chart goes, so it's like back to 2010. I believe they spun off from another company. I don't remember what it is, but I mean, the company really did nothing for years, shot up, went way far down, and now they're going up. And they have retested that all-time high quite a few times. So I just don't really feel confident in purchasing a stock after it's shot up like this. We see the gaps in the price. RSI is high. Does that mean it's a bad buy? No. But again, I just don't really feel comfortable purchasing a stock at an all-time high when I don't know a ton about it. But like I said, it looks like there is potential based on what they're doing with Microsoft. If they have other big companies sign on to their cloud computing, that's great. Let's look at the financials. I mean, see, this to me does not look promising. They had the really big revenue, not a lot. I don't know enough about the company to understand why that is. Free cash flow is negative. They do have more cash than debt, which is good. Shares outstanding is decreasing. Yeah, I just don't know enough about this company. I do think if I was a gambler, if I pick stocks that are risky, that I think could go up, and I wasn't afraid of losing some money or having to sit on holding this for a long time, I do think this is a potential buy because of the hype story around it. The same with CRWV. CRWV is similar. They're a cloud provider for the AI infrastructure. They do compete directly with NBIS. Is it NBIS? NBIS? But both of these companies are what the big hyperscalers, Microsoft, Google, Amazon, are probably going to partner with for certain things. I think CRWV has like $30 billion in backlog contracts, but it's a matter of, do these stories play out long term? Do these contracts grow? I mean, revenue, this company is only not even that old. Revenue is growing. This company is pretty young. They aren't profitable though. I think that was the issue I saw with them. They are not profitable. So their PE is negative 66 because they are still not profitable. So I don't know if I feel confident investing in them. Let's look at the chart. So they have not broken out past all-time highs. They recently, did they do an IPO? So whenever they went public, you can see they went public, shot up, went down past. Then they had a big run up, and now the price is retraced to right around that golden zone I talked about in the last video, the 0.618, 0.65. Let me do this. It found support. They hit resistance back at the 0.382. They're currently above the 50-day moving average and 100-day moving average, but those are, the 100-day moving average is below or above the 50-day moving average. So yeah, I don't know. I feel like this is a risky stock to buy. My gut tells me it probably will go up in the short term, but I don't really want to take that gamble. So I don't know if I'm going to purchase it. All right. One more bonus stock, which is a company I never thought I would invest in. Nike. Nike is the world's largest athletic footwear and apparel company. They have Nike, Jordan, Converse brands. They sponsor athletes, sports teams. Everyone knows who Nike is. But the stock and the company have not been performing well lately. Man, look at this. So at its peak, Nike was at $179. They're now at $70. The company has gone down so much. So that's from this peak. So I'd probably have to go lower. Let's erase this one. Okay, yes, I did. So I'm taking the retracement from the lifetime of the company. So from the very, very, very beginning years at its lowest point, or close to the lowest point. And it's currently dropped below that golden zone, jumped above it, found support, and we'll see if it finds support again here. I feel like Nike is such a strong company. It's worth taking that risk that they're going to bounce back up. There's no way Nike's not going to come back. No way. Nike's too strong of a company, but let's look at the financials so we can see why price is going down. All right, if we look at the revenue is peaking and now it's starting to go down. So maybe people feel like, Nike's losing its market share. Net income's going down, cash flow's going down, dividends are going up, shares outstanding are going down. Again, I feel like Nike's just too strong of a company to fail. There's no way they're going to fail. So that is a company I would consider purchasing. I think I probably will. I don't think we're ever going to see Nike at this price again, or these low prices again. So I might start a position this week on Nike. Let's look at one more company which I'm not going to purchase, which we can compare to Nike, and that's Lululemon. So Lululemon is in the same boat to where they peaked and now they're going down. Why do I feel Lululemon is different than Nike? I feel like Lululemon, I hope my microphone picked it up. I think Lululemon has much more competition than Nike. There's Alo Yoga, Viore, a million other brands. While Nike does have competition with like Adidas, Reebok, and all that stuff, Nike is such a strong brand. Those brands will never overtake Nike, I don't think. But if you look at this chart, Lululemon has broken past that golden zone. Let's do my little rule, one of the rules I like to use with the equal legs ABC correction. Let's see if that goes down. So it's not quite at the length of wave A. So if this is ABC, maybe it's going down to 112. It's possible. Very possible. I don't plan on purchasing Lululemon. I do have some of their clothing. I do own some of their gym clothing. I'm just not confident in retail's backing of Lululemon. I think that there's too many other competitors right now, I don't feel like their branding is as strong as it used to be. But those are the stocks I'm looking at. Those are the charts. I'm curious to know what you guys think. Like, what stocks are you currently looking at? What stocks do you think make the most sense for me to hold in this portfolio? I'm pretty confident with AMD, Chipotle, HIMS, and Texas Roadhouse. Those are new holdings for me. I think those companies have a lot of potential. The easiest thing for me to do would be to purchase more of the companies I already believe in. I don't want to, basically it's if I purchase these companies in this portfolio, I don't know if I add to them in my other portfolio. If I don't hold these in this $10,000 challenge portfolio, I'm going to add to them in my other portfolio. So either way, I'm going to buy these stocks. So let me know your thoughts. Let me know if you know anything about NBIS, and CRWV. I'm interested to see what you think. But I hope I hope this gave you guys some cool insights into what I'm doing, what I'm looking at, the process of how I view what I'm going to invest in. And again, let me know your thoughts. Drop your comments below, like what stocks are you looking at? What stocks do you think are strong? If I brought up a stock do you think is really weak, like if you're like, no, Elf Beauty is not a good investment, tell me why. But that's it for this episode. Thank you for watching. Have a great weekend.